I'd like to thank everybody for joining me today. Today, I want to talk about life insurance reviews and why they're needed to help protect our clients in the planning that they are putting together. If you think about all of the life insurance, everything is based around our clients' goals. And if you look at the life insurance, we want to make sure we understand what's the death benefit for. Every life insurance policy is going to have that as an element. Who are we trying to provide that benefit for, and when is it going to be needed? We also have long-term care benefits. As the industry evolves, they're adding more and more living benefits that help the insured, not just the beneficiaries of the policy. So if long-term care, chronic illness, those types of things are important, we want to make sure they're part of the policy. And finally, we can have that tax-free access to cash value. And all of these things can be wrapped into one. And a lot of times we have goals that involve all three of these. So we've got to look at it and say, does this policy help our client meet their goals? When you look at why do policy reviews matter? Policies drift. The original assumptions aren't holding over time. You know, the crediting may be better or worse than what we assumed. All of those things, as that policy changes from year to year, we want to make sure that the policy itself is designed properly. Lives change. Our clients, they're giving, us an idea of who they are and what they're doing, but as their family, their business, their health, their retirement goals, all of those things move. Remember, the goal line's moving every day for our clients. We want to make sure that matches up. And of course, products evolve. Do we want those new riders, or do they fit our clients' goals in a way that we might want to make those changes? We want to make sure our clients are not going to be surprised by the outcome. And so we want to make sure everything stays aligned to what they're doing. So, what can go wrong without a review? Premiums don't match up, coverages don't match up, the beneficiaries are wrong. And I've had to be the bearer of bad news to clients that thought the beneficiary, they were going to receive a benefit. They didn't, because the owner of the policy had the beneficiaries wrong. We can't change it after the fact. We have to change it before. And of course, there's missed opportunities with living benefits. Remember, no review, you're going to be potentially in for a big surprise because things didn't match up. So when you look at a policy review, the checklist, number one, what are the life events happening with our clients? We want to stay up. Has there been a death, a divorce, a marriage, whatever? All of these things change what our clients are thinking on their goals. And those goals and and obligations need to match up with the policies that we're putting in place. Does the death benefit fit? Think about that death benefit. Number one, is it in the right place? Is it in the business if it's for a buy-sell agreement? But if it's a cross-purchase buy-sell agreement, that benefit better go to the other owners to be able to manage that buy-sell correctly. All of these things matter of, having the right ownership and the right beneficiary. Is the premium sustainable? As our client's financial picture changes, we assume over time our client can afford more premium. But what if it's the opposite and the premiums aren't being paid because, things have happened in our client's business, their work situation? Do we need to ratchet that premium down so we get the most benefit that we can? Finally, is there cash value and living benefits either part of the current policy, or is that a need based on these other life events and goals and obligations changing? Finally, making sure our owners and beneficiaries are matching up to what we've worked through with our client. And finally, looking at the performance. If we've got an indexed policy or a VUL, are those assumptions holding the way they should? If it's a whole life policy, are there loans against the policy because premiums were skipped? All of these things are going to affect what our clients think they have and what they really do have. So, think about this checklist. This is to drive the conversation in a way that it's a repeatable performance for us. So start looking at some of these audit questions. Number one, start with the client, not with the contract. The client wants to know, make sure it fits them. We can understand the contract and we can make sure that part is taken care of. But what's going on in our clients' lives since they bought the policy? You know, remember, we're not going back in time saying, hey, you should have bought something different. We're saying from this point forward, does the policy you have match your new goals and obligations? So forward looking, not backward looking. We can't change the history, but we can change the future. Make sure we understand our client, make sure they understand this is about them and their goals. When we look at the policy audit for the policy design, now we're going to look in there, cash value, loans, flexibility, living benefits, all of those things are going to be examined. Owner, beneficiary, is it in a trust? And if it's in a trust, are we making sure the crummy notices are being done? A state gift tax returns have been taken care of. All of those we want to make sure match up. And then finally, is the policy performing as expected, or do we need to make some changes or change the reasonable outlook for this policy? All of these things are to adjust it from this point going forward to make sure everything matches up with what our client is expecting and needs. So when you think about this, we're trying to get things to move the right direction for our client, and we're trying to help our client. And the question, I like this first one: if something happened tomorrow, would this policy still do what you bought it to do? So get them in the frame of mind. We're not trying to resell them, or we're not pressuring them to buy anything new. We're just making sure what they've already bought is a good fit and can provide that peace of mind going forward. The best thing we can ever tell them is what you bought is perfect for your situation. We just want to make sure if there's a problem, we know it before anything happens. So think about this. What motivates a client to say yes? Are we protecting what matters to them? Are we avoiding any of those future surprises? And potentially, are we finding hidden values in the policies, either a current policy or the ability to change that to a new policy? It's one I've worked with clients in the past where we've looked at their old policy. They've built up a lot of cash value because they've stayed healthy. All of these things, we can easily move into a new policy and achieve more of their goals than the current policy did. All of that is just there again, helping our clients to stay in control of their planning. That's what we're helping them for, is to create that control. So if you think of the simple review process, we need to gather the policy and the statements. What did they buy? Clarify their goals and have any changes occurred since they bought the policy. Where are they at today? If needed, let's order that current in-force illustration so we know exactly what's happening. Compare that fit and performance, make sure it matches, and then if we need to, we're going to recommend keep it, adjust it, or replace it. Those are the three things that we can do with this policy. And now our client after this is going to know that what they've done is they've now made an informed decision from looking at today going forward. Not we wish it had turned out different. We can't control that part of it. But as we make these adjustments, if needed, we're going to have a better fit for our client, and our client's going to understand that what they have is meeting their new goals and obligations. So as you start looking at this, we talk about building this, creating this puzzle for our clients. As we understand their goals and objectives, we figure out, is this for, family protection, retirement, business, long-term care, what all of these puzzle pieces are. And as we pull this puzzle together, remember, one of those key pieces in the middle is going to be their life insurance planning. Does that puzzle piece fit? And if things are getting out of whack a little bit based off goals, objectives, life changes, whatever, that puzzle piece may need to be adjusted so that going forward, our clients have a complete puzzle and they can feel confident in the planning that they have and what's going to happen into the future. So I appreciate everybody getting on. If you have questions, reach out. If not, we'll talk again next week. Thank you.